Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. Vishnu, welcome to the show.
Always good to be here, Brian. Thanks for having me.
Now, before we get your insights, let's take a quick look at a little bit of news as well as take a look at crypto markets and regional markets. Now, first of all, very important, there's a quick update from the Hong Kong Exchange. Trading in Hong Kong markets is set to resume at 1:30 Hong Kong time or Singapore time after an earlier severe weather warning was lowered. So earlier in the morning, just for our audience, the Hong Kong Exchange and Clearings announced that trading for both securities and derivatives markets, which includes Stock Connect, would be delayed because of a black rain storm warning. So we are all back to business as usual at 1:30 today, which is in about half an hour. Now, let's take a quick look first at how crypto markets are performing. We'll take a look at just give me a second. Bitcoin is now at 34,368. It's up 3.54%. Ethereum is still under the 2,000 mark. It's at 1,973. It's up 4.85%. If we look at regional markets, and we're going to start with the SGX is at 3,130.29. It's up 0.28%. Over at Bursa Malaysia, it's at 1,542.28. It's down 1.12%. And across the region, if you just give me a second, as my terminal is refreshing, markets are very, very mixed because the rest of the markets are in fact in the red. We've got the Nikkei, which is at 29,026. It's down 0.14%. Shanghai Composite is at 3,605. It's down 0.06%. And rounding off the numbers, we've got the ASX 200, which is down 0.09%. Vishnu, pretty mixed market. What's happening out there?
I think markets are showing the lack of confidence, even though we had U.S. markets ending on record highs. So I think this reflects quite a few themes. In Asia specifically, the fact that we've got COVID outbreaks causing a little bit more consternation with Sydney going into lockdown, Malaysia extending its movement control order, and Indonesia also grappling with much higher outbreak rates and hospitalization capacity maxing out. These things are taking a little bit of a drag in the region for those considering the differentials. In the US, initial cheer from the Biden infrastructure plan probably has got some reassessment due, given that Biden has probably put across and I think backtrack a little bit in coupling it together with the family care plan that focuses on healthcare and education. So the bipartisan support for infrastructure giving way a little bit more on more fractious issues means that US fiscal stimulus is also being reconsidered, in terms of how much more of a boost it can provide to the US. So in aggregate, markets are not completely convinced that there's fresh stimulus to get another leg up, whereas they're still cautiously keeping their eye on the possibility of mention of taper either at the August Jackson Hole or at the September FOMC meeting.
But how about the central banks across the region? How are they curtailing their responses or perhaps being more aggressive with their responses?
I mean, that's a really good question, given that, we've seen the most recent central bank actions have been the conspicuous lack of any specific action. I think central banks have been quite cautious given that inflation has been running up a little bit higher, and also a Federal Reserve that it seems to be signaling towards, at some point where they have to do taper. So central banks are a lot more worried about stability of capital flows, what it means for macro stability risks. Yet at the same time, the subsequent waves of COVID means that they cannot comfortably retract and remove all the accommodation in place either. So many are trying to find their way around it by providing additional credit measures, liquidity measures as a complement to fiscal policy. But even here, I think the inflation story and global market volatility will probably dictate a lot of how central banks will react and respond as the coming months arrive. The Reserve Bank of India, in particular, may have to grapple with much higher inflation, and so signaling of normalization much earlier than it would rather have.
Now, also one of the things is the signals in terms of data across markets are very different. We just had on Sunday the profit numbers from China's industrial firms, which actually rose at 36.4% in May. Now, compared to a month earlier, year on year, it was 57% up. But obviously, that was from a lower base level numbers. So you're obviously having good numbers coming out of some markets in terms of exports and in terms of profits. But then looking at the data ahead now, that was a data point. What should we read into it? But there's a lot of data coming out this week, including the jobless numbers out of the US at the end of the week on Friday. What should we be looking out for that will move markets this week?
I think one of it is the realization and how markets deal with the fact that a lot of the so-called upside surprises and good news is already baked in. As you rightly alluded to, the base effects, of course, flatter the headline numbers. So none of us are going to take 30 or 50% at face value. But even then, as you rightly said, it is encouraging that we do see sustained recovery coming through. There are a couple of points that markets will take away. I think markets will be very circumspect about how much of the boost is coming from the so-called price effects, rising prices rather than the actual underlying demand rising. The other thing that markets will be looking at is in the context of a rolling COVID crisis hampering demand in Asia, coupled with the prospects of the Fed tightening coming about, how that will impact continued demand recovery. And for anyone making an educated guess here, a straight line trajectory of the kind of recovery we've seen is probably not on the cards. It's something that's going to peter out a lot sooner. So that will be something that markets will start pricing in, and how that affects equity valuations going forward will be determined by two key things. One would be the timing and the magnitude of taper, and the other one would be the kind of cash flows and discount factors, particularly from the inflation, how much of the profits and spending power inflation erodes. Those will be key considerations for markets as they come face to face with these issues.
Now, Vishnu, as always, thank you very much for your insights.
My pleasure, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank from Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please subscribe and like our various platforms, and also check out our website, www.biztech.asia. Thanks a lot for tuning in.